Hi guys, today we're going to be looking at Doji candlesticks. Have you ever seen those candlesticks where they're like little crosses, like these guys? That's basically a doji, and it's one of the most important signals in trading. Why? Because it's a sign of market indecision. A doji candlestick pattern is where the open and the close price is basically the same. So you can see them here. And what does it tell us? It tells us that buyers and sellers pulling at the same thread and no one's winning. It shows us market indecision. While all doji signals do show indecision, their wicks do give us a clue. So there are 5 main types. You can see you've got the classic doji, opens, closes in the middle. This is very much an indecision candlestick, and often we may well see a reversal from whichever direction the market is going. So if it's coming down, this may well be the first signal that we might start to go up. Then you've got long-legged doji. You can see here that it closed at the same point. Sellers pushed it down and then buyers pushed it back up and it held up here. It actually shows that there are more buyers in the market. Similar to Dragonfly doji, you can see sellers pushed it down and then it closed back up here at the highs. The opposite is true for the Gravestone doji. So you can see it would have opened here, come up to this high, sellers pushed it down and closed here, showing that sellers are in control. If you start to see a market come up, you see this candle, that's a signal that we might start to see it come off. Then you get the full price doji, which basically it's stagnant. No, the market hasn't moved through that period. If we go back and look at the chart, you can see we've got a doji here, this little downtrend, we get a doji, and then it shows the market continue there. How would you actually use it? You look at the location of the doji, you look for them at the end of trends, you look for them at the middle of a trend for a continuation, because it may well be the market taking stock, or look at it at the end for a potential reversal. You can also look at it at key levels. And then one of the other important things you need to look at is a confirmation candle, the next candlestick afterwards. Here you can see you've got a doji, the next candlestick is a buy. You'd then be looking eventually for this market to go higher, and it is a continuation trend. The best trades happen when you get a confluence, so you use other indicators as well. You know, it's trending higher, you maybe use some stochastics, MACD, trend lines, support and resistance. All of these kind of indicators help bring a bigger picture for the trade. That's it for today. Join us then.